Okay. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Today is Friday, the 13th of June, and it's 9 o'clock as usual. I remind you, it's always 9 o'clock UK, whatever time it is in your country. So if you're watching from outside the UK, as I know most of you do, then check the time before joining. Okay, now you might have noticed a bit of sharp moves in the market overnight. Anybody aware of what's going on? Eric?
Israel attacked Iran.
Exactly that. So Israel attacked Iran. So the kind of the move, there is always a knee-jerk reaction to this political instability. And we'll go and have a look at what happens in a case like this. So it's a good test case that we can have a look and what it means for us as investors. So how can we be, first of all, is there's no way to know these things in advance. So these things are going to happen, and there are things that we can do to protect ourselves generally, protect our portfolios, and then there are things that we can do when these things happen, because whenever there's a problem for some and there's an opportunity for others. So let's go and have a look. A few things. Let me share my screen. Okay. Now, first of all, let's go through the investment announcements weeks. Sorry, the week's announcements, economic announcements. So we had the main things that we had. We had a CPI announcement on Wednesday for the US, which showed that the CPI slightly increased for the first time in quite a few months. The CPI just notched slightly higher from 2.3 to 2.4%, but having said that, it was lower than expectations. So it was the increase was smaller than a month before, and there was a higher number that was expected. So it's always like the reaction. It's funny, but sometimes the markets react not so much to the number in itself, but to the difference from expectation, because the expectations in the market, it means that how the prices have been already positioned for that number to be released at that point. When it's different, obviously the market then adjusts. And I mean, this case is not a huge adjustment because it's only a small difference, but in cases where the difference is bigger, then there is a larger adjustment. Yesterday we had the second part of inflation. So on Wednesday we had the consumer price inflation. On Thursday we had the producer price inflation. Okay, and again, this was, although it ticked up at 0.1%, where it was negative in the previous month, it's still lower than expected. So this is the higher numbers that were principally expected because of the Trump's tariffs haven't quite materialized yet. On the unemployment claims, generally speaking, they are now ticking higher. So we can see better in where's that? In this other site. Where are we? Let's go to yesterday. So the initial jobless claims, which are the new application for Social Security, which again is similar to the previous month, but higher than expected. The other thing that the one that I would like to look at is the continuous jobless claims. Okay, this number had been at about 1.8 million for a year and a half, is now ticking up, has gone above 1.9, and the number announced yesterday was 1.95. So really coming closer to 2 million people just unemployed. And again, these are remember that the Fed has got a double mandate. One is to control inflation, and the other one is to keep the job market functioning well. So it's the unemployment going up is one of the things that would push them a little bit to lower interest rates. Okay, where if the job market is strong and there are inflationary pressures, they would be wanting to keep interest rates higher. So if you remember, one of the questions, if you were on the call last week, I mean, there was a question about bonds, for example. Okay, so like is it a good time to invest in bonds or not? And so I want to show you, if we go to the TLT, which is an ETF that covers 20-year plus duration bonds. You can see how where we were last week at around 85, we already ticked up quite considerably now to 87. So this is quite a strong move for bonds that don't move that quickly, generally speaking. So 2 out of 80 is like a 2.5% move in a week, which is quite considerable. And if we look at it on the long-term figures, we have just basically touched the lowest level like we've had since the early 2000s now. So the expectations are that so this is the reason why we have gone higher this week, and you can see the weekly move here between 85 and where we are now at about 87. The reason why we are going higher, because now there are, following the inflation reports, we are now expecting a cut in interest rates at this month's monetary policy meeting. Okay, so remember the bonds work inversely to interest rates. So as interest rates go down, the price of bonds goes up, and the other way around. So it works inversely to yield, basically. So the higher the yield, the lower the price of bonds, and the lower the yield, the higher the price of bonds, because it means that you have, just imagine, if you bought something that pays, let's say 10%, okay, and you can get something in the market that pays 12%, nobody will want to buy yours because they can get more in the open market. But if the prevailing interest rate is 5% and you got something that pays 10, that's very valuable. Okay, so that's the reason why prices differ so much. Okay, looking forward to next week. Okay, so we got the Bank of Japan that will announce the interest rates, retail sales, inflation in the UK, and then we have the big one. So this is the meeting on Wednesday of the Monetary Committee.
Yeah.
That will announce new interest rate. Now, expectations at the moment are for the interest rates to remain as they are, but it's not out of realm of possibilities that we will see a decrease in interest rates. And also remember that a lot of importance is given not just to the announcement itself, but to the statement, because the statement talks about the future, about the outlook that the Fed has for the future. So that a lot of importance will be given to the words used in the statements as well as to the announcements. And going forward, the same. So we got Bank of Japan, central bank in the US, and Switzerland as well. Okay, at the moment, Switzerland is the country with the lowest interest rates since Japan increased the central bank interest rates. Now, Switzerland has got 0.25%, Japan 0.5%, and then everybody else. US is still the highest paying central currency, 4.5, pound 4.25, and then everybody else is below 4%. And also, sorry, so it's a kind of like quite a heavy week in terms of announcements. So Bank of Japan, US, Switzerland, and UK. They're all announcing the official rate. And again with some small like retail sales announcement. But from the point of view, if you trade at all in foreign exchange, you might see kind of like a reasonably large move. So be careful before there are announcements in each one of these currencies. So if you're trading, like for example, the Japanese yen, be careful before the Tuesday's announcement, and the US dollar, be careful before Wednesday, and so on, for the Swiss franc and the UK, the British pound on Thursday. Okay, so it's going to be quite a. Recently, the currencies have been very subdued. There can be probably some good moves next week because of all these announcements. Now, let's go and have a look at some announcements. Now, Bitcoin price. So this announcement becomes slides from, it was almost like 107 to 103 as this Israel launches airstrikes on Iran. And on the other side, on one side, we had Bitcoin doing this. So let's have a look at it in a chart. So can you see here, we had last night, it was like this is UK time, around 7 o'clock. We were actually 108,000. And I think it was about 9, 10 o'clock when the strikes were felt, and it went down from almost like 107 to 102, 2006. We are now recovered to 105,000. Now, it's funny enough, if you look at, I had this level here from a previous analysis. Okay, this 103 to 103.5 to 102 level on my chart, although it was broken in beginning of June, I often leave these on the chart because they're still significant. And what happens is that now the reason that Bitcoin dropped 4%, is that a fundamental reason or not? That's the question that I'll go for you. So is there a reason now because Israel attacked Iran? Is that a reason to sell Bitcoin? From an economic perspective, what has changed? Remember, and I just guys, if we look back, so what was happening here? Anybody remembers at the end of 2022? Okay, we were in the middle of Ukraine war. Israel was attacking Gaza, and so on. What happened to Bitcoin? Oh, it went from 15,000 to 100,000. Within obviously took a couple of years. Yeah, it's not immediate, but so it's in a way Bitcoin is more and more now being seen as like digital gold. So there is no logical reason from the point of view of what's happened overnight for Bitcoin to to be sold off. So for us as investors, what does it mean? I mean, what it meant for me, I don't know about you, and this is not financial advice, but if you haven't been buying Bitcoin after this drop and you have seen what happened, but you've done nothing, then shame on you. If you're an investor, and honestly, I'm not joking here. So this is what we got to remember as an investor. We got to be greedy when people are fearful, and we've got to be fearful when people are greedy. Okay, as simple as that. So whenever there's a big drop like this, for me, I just start, fantastic, great, where can I buy? where can I buy? And there is to be honest with you, where it turned, there is no reason looking at current movement that price should have turned there. The only reason why I still bought is because I was aware of this previous zone that often in moments like this still works. So the moment when price started turning around, I then was quite happy to buy. Not, I wish I bought down here, but I didn't. But I was quite happy to buy around just below 104, because then I had confirmation that price was leaving this area and was regaining part of the ground that it lost overnight. Now, the reason for the trade, the way you take profit, or if you keep it for long, it doesn't really matter. That depends on you and your particular circumstances. But it doesn't detract from the fact that it's a fantastic opportunity to, when things like this happen, it's a fantastic opportunity to buy great fundamental assets that are being sold off, let's say, at a discount. Now, obviously, the other thing that happened overnight is what happens in a moment of panic. People go back into gold. So this is the other thing that happened overnight. You can see this. Okay, so we were last night at 3,000 barely. So this is the futures, by the way, not the prices of spot prices of gold are slightly different. They're slightly lower, but we were at 3,400. So from 11 o'clock, they were at 3,399.8. So literally on the dot, for 3,400 on the dot. Within 3.5 hours, we've gone from 3,400 to 3,466. Okay, so that's a big move. So generally, this is about gold moves roughly at about $100 in a day between the higher point and the lowest point. So this is for doing the quiet session, because I know the gold trades 24 hours, but the session with the most liquidity are the London session and the New York session. So starting really at the London session starting an hour ago, and the New York session obviously going to start at around 8 local time, New York time, so about 1 o'clock in the UK. So to have a 3/4 of a day's move doing the Asian session, it's a lot. It's a lot, especially in a small period of time like this, really from midnight to 3:30 roughly. So in 3 hours, we had a $66 move, which is remarkable. And this is why, during periods of uncertainty, people retreat into kind of safe assets. So what are safe assets? Kind of like gold is one. What's the other main safe asset? Can anybody tell me? Now, come on, it's not difficult. It's the US dollar. The US dollar, safe asset. So what happened? Again, you see how gold grew over time. This is the US dollar. They have been pretty much in free fall. Okay, over the past, let's say, week, from May. It's lost about 3% just from May, and more if we go further back. And last night, in a very short period of time, again, it gained almost 0.8%, which again doesn't sound a lot, but for a currency, 1% move is huge. Okay, especially in 3 hours. Okay, so there's a flight. Whenever there's danger, there is flight into safe assets. Why? Because if people have to run away, they want to take something with them that they can use somewhere else. So the things that are more used across the world are, gold, the US dollar. You can spend US dollars anywhere, even outside the US. Everybody takes US dollars. And the other thing, more and more, is going to be Bitcoin. Okay, Bitcoin is because it's a kind of like digital asset that you can take with you in your pocket wherever you are. Even if you have to run away, you can have a ledger, which has got all your coins in it, and you can run away with it. Even if you didn't have the physical device, but you have the seed phrase in your head, you can recreate that wallet and have all your assets, even if you have to run away in the middle of the night during a bombardment. Okay, like in this case. So this is why it is, or saying to you, why it is kind of like a good time to buy something like this after a huge drop like this. Okay, because this is not kind of like, I know in Bitcoin we kind of like got used to these sort of things, but a drop of 5% in what time was that? So 7 p.m. till 2 a.m. Okay, so that's 7 hours. A 5% drop in 7 hours is a lot, even buying Bitcoin, by Bitcoin standards. Okay, so it's normal if you can buy, if you bought when this happened, when it started picking back up, it is normal to recover, if not all at least just today I'm talking about, at least part of the lost ground. Okay, then going forward, then you have, you take your own views to, what Bitcoin is doing and if it is a good investment long term or not. I've talked about this several times, and you know what I think about this, and where we are, not just in terms of money and investment, but what digital currencies are going to do in the future, and the way that we are changing the way that value is exchanged, between people. Because I know that we always think in money and how much we get for our work, but really just stop thinking about money as a thing. Money is a language. It's, in its purest form, money is a language that enables us to talk about, to express the concept of value to each other. We can say that thing is more valuable than that. Is worth more money than A. Things A is worth more money than B. So things A is worth more than B. And it's something that manages to, where in a simple society, we could do that by barter. Okay, when in a global society like this, it's impossible to do. It's too complex to barter. So this is why money is something that enables the exchange of value between different people that can be, coming from different cultures in a completely different part of the world. But the idea, when money was first used as a form of exchange, that was normally in the form of gold, because it's something that's scarce, that takes effort to take out of the ground as well, and nobody could control, because that's one of the main characteristics of money, is that not one entity can take on control of the supply or the things that's used for us to exchange value. And this, unfortunately, since kings and queens have started taking the issuance of money in their own hands, is what has caused problems that have been, becoming larger and larger in our current society. My belief is that we are redesigning with digital currencies the way that trade works across the world, and the way that we handle the exchange of value between people, countries, and communities, and taking the power away from centralized actors, call it countries, central banks, etc., and enshrining it into code. Because this is, at the end of the day, is what projects like Bitcoin and other cryptocurrency are like the power doesn't reside in the hand of one entity, but it's like distributed between thousands and thousands of different people that maintain the network. So the same way that religion was central to the running of the state during the high history and until the last century. Now, religion has been split from the running of the state, the same way that we're going to, I believe, in the near future, obviously, we still have government, we still have organizations, but they will not worry about how they manage money. They will manage things for us, how the police works, how the, fire brigade works, etc., but they will not control how much money they need to be printed every year, because we'll be using currencies that are regulated by code, and the code will be the law, not the governments. So having had this little thing about the way my mind thinks, let's go into a few bits of news that shows you why cryptocurrencies are becoming more and more important. Shopify. How many of you have interacted with bought stuff and the cart? So a shop that's been made as Shopify, then they bought an item, maybe an item of clothing or something like this, and Shopify was managing the cart. Now, Shopify partners with Coinbase and Stripe to enable USDC payments for global merchants. So you'll be able to pay directly from your base, from your wallet in the base blockchain, which is an Ethereum layer 2. And so you'll be able to pay directly with your wallet without having to use money that's in your bank account. So again, can you see how we are decoupling from the banking system, and more opportunities now you have to use your digital currency directly at the point of sale. So this is another case. It's not by itself, it will not make everybody adopt cryptocurrency, but as it becomes easier, then it becomes easier as well for people to use it and to have it on their phone, because obviously most wallets can be accessed from your phone. So the same way that you use your card by tapping your phone, you'll be able to use your cryptocurrency wallet to pay for things. Now, another very important news: the U.S. Senate is voting on the stablecoin regulation on the 17th of June. Okay, so and this is again is an important part of crypto regulation. In particular, it will affect stablecoins. So it will enshrine in law certain principles, like first of all, the stablecoins must be fully backed by US dollars or similarly liquid assets that will be determined in the bill as well. Issuers with over 50 billion in market cap will be subject to mandatory annual audits, and that's good. So you want to know that Tether or Circle or any other issuer of stablecoins with a huge market cap, that they really have, I know they say that every stablecoin is backed by dollars in the bank. Well, show us these funds and show us the audit trail. And also the bill outlines regulatory compliance standards for foreign-based issuers operating within the US market. Okay, this is talking about the US market especially, but the US market is very large and has a lot of influence. So this is called, you may have heard in the news, as the Genius Act. And it's important not because, where are we? I don't want that. It's important because it makes cryptocurrency, in this case stablecoin, a regulated item. So it's not like just the enemy or the devil or something, or whatever they try to paint this thing. It's make a thing that has got its own place in US laws that can be used the same way that you use a bank account. And this may be fairly big, because if you have on one side a bank account that's paying you 0.1%, on the other side you have a stablecoin account, it has the same thing. It's the same protection as the bank account, but it's paying you 3 or 4% a year. You can see how funds, banks either have to change what they are doing, or funds are just going to flow out of banks and flow into stablecoins. Now, and other small things now, as Syria and the sanctions against Syria are being lifted, so cryptocurrency is moving into Syria as well. And it's not, obviously, I'm not talking about it on the world. It will make a big difference to cryptocurrency, but it will make a big difference to Syria. Okay, because those are the countries where access to strong asset is sought a lot more than if you are in the UK, in Australia, or in the US, because we got options. The options from Syria are very limited. So that's important. I'm happy for them, to be honest with you. More than it makes any difference for crypto trading or for crypto prices. But again, it's just like another brick in the wall. We're building the big wall of China, and every brick counts. Other things, who even I at my age, I can remember Mattel. Who hasn't played with Mattel toys? Okay, so they're one of the largest toys producers in the world. Now they have partnered with OpenAI to launch AI-powered products later this year. So this is products that are going to be developed using AI extensively at the development stage. So you can see how things have moved, the direction that even traditional businesses are moving into the digital age. And some of these toys might be physical products. Some of them may also be digital products. Okay, because the kind of digital versions of these toys that can be used as well on the computer. So watch this space, and it just tells you of how things are moving. Now, you see, Jerome Powell to be fired. Donald Trump warns Fed rate cap now, and he's stomping on the ground and thinking, please do this or else. Well, unfortunately, it doesn't have any influence on Jerome Powell, and he can't fire him. Okay, so he's putting a lot of pressure on him, wanting him to reduce interest rates, and also saying that they want to reduce interest rates by a full 1%. And I don't think that is ever going to happen in one go. But there is a chance that next week there might be a small drop in interest rate. So or even if they don't, there might be a change in the language they use to talk about the future, because I think there are less and less reasons for them to keep the rates artificially high. The main reason is that they really wanted to weigh the effect of these tariffs on on inflation first before starting to cut interest rates. But they know that more than what Trump is saying, the pressure on Jerome Powell will come from inflation and job figures more than that, because he's shown already that is really don't paying attention to what Trump is saying, and it shouldn't be, because this is one of the main way that the US is arranged, and so many other countries, is that the central banks is independent. So if we take away that, it's we're going more towards a dictatorship than a republic. Okay. Again, small bit of news that you might miss, but this is an asset manager that's overseeing more than $2 billion in assets. Is now partnered with Lido Finance. Lido is, those of you that have Ethereum, and the stake is one of the main places where you can stake Ethereum. And what happens is that when you stake Ethereum with Lido, they give you a token that represents that stake. So your Ethereum is locked into the staking platform, and you receive the staking rewards Not only that, you are giving a what you call a STETH, which is staked Ethereum token. Now, with this staked Ethereum token, you can then use it to go into DeFi, for decentralized finance to for lending and borrowing, etc., etc. This is a more formalized version of that, so they will allow companies and institutions to still keep their Ethereum and keep the staking rewards from their Ethereum, but at the same time, use that staked Ethereum to get some liquidity and just to kind of borrow money using the staked Ethereum as collateral. So you can see how this new technology can work. So from a point of view of, and just think about a pension fund or institutional holder, they invest in Ethereum, they're getting whatever 3% rewards a year, whatever the staking rewards are for Ethereum, but they want to do other things and borrow money, so they can do that while still receiving the staking rewards. It's quite something, isn't it? It shows you why also more and more companies, more institutions are looking at investing in cryptocurrency as part of the investment funds. And the last thing before we go into some questions. So the SEC is carrying on with, this is what Trump had announced actually before he was elected, and he's keeping to his word. The one good thing that he has done. So he's carrying on with the deregulation of crypto, regulatorily overseeing. Okay, so they were trying to introduce a lot of legislation that would have damaged crypto very, very much if it had gone through. In particular, they were talking of classifying even decentralized exchanges like brokers that would have made it almost like impossible for them to operate in the US. And another rules about crypto custody as well that would have made it very difficult for financial institution to or from exchanges and other institutions that don't have the licenses like the banks to custody cryptocurrencies for investors. So again, there's not one thing that changes the outlook, but this is again, it's another step in the right direction. And this is kind of like a big worry. This proposed rules, excuse me, it's a big worry that kept a lot of investors away. I'm not talking about investors, individual investors. I'm talking about institutional investors because they didn't have clarity about what was going to happen. And when you don't have clarity, then there is risk attached to it. The risk is too high at an institutional level, and so they stay away from investing. Now, removing these obstacles, it might pave the way for even more institutional investors that we have now. So what time is it? We got about 20 minutes. So I'll just put the Bitcoin chart back on here, and let's get some questions. Okay, feel free to unmute yourselves and ask questions, or you can type them in the chat box.
Look, a quick question.
Mhm.
While you've been on air, been looking at the dollar index. Could you pull up dollar index chart? And I'm seeing this pattern here, jumps 0.5.
Which time frame? You're looking at a daily or?
It's a daily chart, but the 15 minutes intervals candles.
Yeah. Okay. What do you want to ask about this?
Can you see on my screen on my mobile phone?
Wait a second.
Quite a while jump up and down.
So what, just describe it to us. I can't really see properly.
Yeah, it's fluctuating. Previously, normally it just fluctuates by a point, a small amount, but this is fluctuating by 0.5 points up and down every 15-minute intervals. So I'm just thinking what the pattern is trying to emphasize.
So on a daily basis, so this is not very significant on a kind of like intraday basis. I mean, we know that when there is political instability, the dollar goes up because people go back into a dollar. If we look at it more widely, so the dollar has been kind of like in free fall since January. So if you see from January, this has lost 11%. Okay.
Yeah, it's
This
down
is
quite a lot.
against a basket of currencies. So the dollar index is a basket. It's the value of the dollar against a basket of currencies, of which the heaviest weighted is the euro, but then obviously the British pound, Japanese yen, Australian dollar, etc., etc. Now, one thing that we do see is that at the moment we are sitting in an area of demand. So we have gone between this area of demand to this area of supply. So although we've been there before, this is the second visit, and we're touching the extreme edges of these demand. I was expecting so far, a bounce in the dollar, because it's now you can see the angle of the speed at which the dollar is declining. It's definitely has reduced. So it's kind of like normal. Yes, there is a condition of political instability, but kind of like everybody was expecting the dollar to have at least a bounce, if not all the way to this, at least to the past the 100 mark. Possibly, I would expect it to retest this supply area between 100, almost like 102, and then see what happens there. It might be an hour rejection and then moving back lower. But each level, you can see, it's not going to be like a fast drop like we're seeing from January, because there are kind of like there are different demand zones below this that are going to slow down the drop of the dollar. So we might, if we move lower, then we might move down another 1.5%. But it's not going to just crash down all of a sudden and lose another 10% in a matter of a few weeks. So that's the thing. At the moment, the dollar obviously is not surprising, because they're openly talking about making dollar weaker to help the US manufacturing, and in general to sell more American products abroad. But I think it's the dollar at the moment is still the currency that offers the highest interest rate, and it's always going to be to have some power, because it's the world favorite exchange currency. So it's never going to kind of like crash, at historically low levels. So we still have, as you can see, at levels that we've been at since 2015, but historically we are kind of like in the middle of this range. If we take this, or the high point. So I'll show you here like this, maybe. Can you see this? So if we go really for the kind of all-time extremes, from the high that we had in 1985 to the low in 2008, we are at the moment just below, just in the bottom third, but very close to the middle third. So it's nothing, nothing in the long scheme of things, nothing too much out of the ordinary. So obviously this move take several years, and we've been in this current uptrend when we're considering the weekly and monthly charts that's lasted since 2008. Okay, so to actually see a move, historical move to the downside, we would have to go below 88, which is another 10% drop from here. So even if we get there, it's not going to be like a quick move. Okay, so it's taken about, the last move up was taken for 2018, February 2018 to September 2022, so 4.5 years. So the moment we're about 3 years into this current retracement. Anything in particular that you wanted to know about that move, Dinesh?
No, I was just mainly looking at the pattern while you were talking, and then it just been zigzagging up and down on a 15-minute scale, and it's very strange. It's strange that it's moving up by significant amount.
Yeah, that's uncertainty. So this 15 minutes.
Just now compared to the previous trends.
Yeah, no, but for me, the way you use the dollar index is if you are buying or selling assets, they are denominated in dollars, is to just give you, if you can, because not always we get a clear picture, but if you can get a clear picture of directionality, if we know that the US dollar is appreciating or depreciating, can skew our investing in one side or another. Okay, so if we know that mainly the US, the dollar index is pointing upwards, then we buy dollar denominated assets. If we buy the US dollar, or if the dollar index is going down, we sell the US dollar. This is the way that you use it, generally speaking, but you don't. So it's
okay. Okay, yeah.
It's not really a tradable. Although it's an index, and it can be, you can trade it through CFDs or through futures. Futures are expensive in a dollar index, it, generally speaking, the moves are not interesting enough to trade on a contract for difference. So I don't use it for that. Apart from very specific cases, if there is like very strong signals. Okay, so
thank you. Yeah, thank you for that.
Often I just use it as a direction to
directional. Thank you.
What else I do?
Yeah, brilliant.
No problem. Okay. Are there questions?
Luca, when I traded coins, I took the money from my ledger to Binance or Coinbase and traded it there. But now Ledger Live offers you a chance to trade within Ledger Live. What do you think about that? Is that safe, or is that better, worse than taking the coins out to Binance and trade there?
It depends on the coins and the blockchain. Some blockchains are fairly, so it depends also how often you want to trade. So I wouldn't trade directly from Ledger Live, because generally speaking, it's fairly expensive using the swap function. But you can connect your account to a decentralized exchange and trade there. So it's perfectly fine if you to connect your account to 1inch or PancakeSwap, and depending on what what blockchain you are on. The only thing that you can't do that's still difficult to do from a decentralized exchange is to do cross-chain exchanges. So if you want to, I don't know, sell Bitcoin and buy Ethereum or Polkadot, that's a lot easier on an exchange. It is on like Binance or Coinbase than it is on a decentralized exchange, because in that case, the cross-chain transactions are going to be very expensive, because you need to move, you need to basically bridge coins from one blockchain to another and then exchange them, and it becomes like really not really cost effective. But if you need to buy, for example, if you need to trade Ethereum with Ethereum tokens, so like tokens they exist on Ethereum exchange, on Ethereum blockchain, then that's fairly feasible, because now trading fees are getting cheaper and cheaper all the time, especially if you use like layer two providers, whether it's Base or Arbitrum, or other layer twos. The costs for those are becoming very comparable to centralized exchanges.
Thank you very much.
Okay, no problem. Okay, what else? Any other questions? Okay, no questions. Early finish. I think I have talked enough for one day. No, okay, guys, we don't have to stay on. I mean, it's almost the end anyway. It's 5 to 10. So I will wish you all a fantastic weekend. So I'm gonna be back here next week. So we'll do the long-term wealth hour before at 8 o'clock, and the crypto hour at 9 as usual. So watch the markets, and even if you're not buying or selling any cryptocurrencies over the next few days, but I would say use it as a case study, at least. So see how the markets behave when there is political uncertainty, like there is right now, because this wasn't the first time, and it's not going to be the last time that something like this happens. So having an idea of what you can expect in a situation like this, it's definitely helpful for the future. Okay. All right, guys. I wish you all a fantastic weekend, and I'll see you back at the same time, same place next week.
Thank you very much, Luca. Have a nice weekend.
Bye, everyone.